Ladies and gentlemen, good day and welcome to Electronics Mart India Limited Q2 and H1 FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. I now hand the conference over to Mr. Karan Bajaj, CEO and promoter. Thank you, and over to you, sir.
Thank you very much. Good evening and a very warm welcome to everybody present on the call. Along with me, I have Mr. Premchand Devarakonda, our Chief Financial Officer. We have uploaded our results and investor presentation for the quarter and half year ended 30th September 25 on the stock exchange and the company's website. Hope everyone had a chance to go through the same. During the quarter, performance was marked with volatility owing to the GST rates announcement, which led to some deferment of purchase in the initial weeks. However, demand rebounded swiftly following the reduction in the GST rates on select categories, resulting in a strong recovery in sales momentum. Operating margins were also impacted due to our rapid store expansion. We have added around 75 stores in H1 FY24, and many of these are still in the early stages of stabilizing. As a result, fixed costs such as employee expenses, marketing, and promotions are not yet being fully absorbed. The rapid expansion has also led to higher financing costs and depreciation due to the IND-AS 116 lease accounting impact. Together, these factors have affected our PAT margins and PAT as well. As the new store ramp up and start contributing more meaningfully, we expect margins to gradually improve in the coming quarters. To give a clear perspective on our store portfolio, out of total of 215 stores, 84 stores are more than 4 years old, while the remaining 131 stores are less than 4 years old. The mature 84 stores delivered sales of about 2254 crores in the first half of FY26, whereas the newer 131 stores contributed revenue of around 933 crores. These figures represent revenue from product sales. On the profitability front, the matured stores continue to perform strongly with an EBITDA margin of 6.8%, while the newer stores currently operate at an EBITDA margin of 3%. Now I would like to share a highlight on our geographical performance. We have seen a broad-based recovery in demand across all our key clusters. In Q2 FY26, our core market of Hyderabad recorded a strong revenue growth of 15% Y-on-Y, with a healthy SSG of 12%. In Telangana, upcountry market revenue grew by 23% with an SSG of 16%. Andhra Pradesh delivered a robust revenue growth of 29% and with an SSG of 8%. Lastly, our NCR cluster continued to scale up well, achieving a revenue growth of 38% and an SSG of 11%. Talking about cluster-wise profitability, we continue to maintain a healthy EBITDA margin of around 6% in the southern cluster, despite adding new 60 stores across Andhra Pradesh and Telangana over the past 2 years. We are also pleased to share that our NCR operations remain EBITDA positive with a margin of 1%. We believe margin in this region will scale up further as we start achieving greater business scales and operation leverage soon. Talking about category-specific performance, I had earlier shared an update on the large appliances segment during Q2 FY26. In numerical terms, large appliances contributed 38% in the Q2 FY26 and about 43% in H1 of the FY26. Another positive trend we are seeing at the store level following the GST reduction is an increase in the average selling price, as customers are increasingly opting for large televisions and higher priced air conditioners or even purchasing newer categories such as dishwashers. The shift towards premium products will help in driving and improving overall ASP as well. Moving to mobiles. Mobiles contributed 48% of our total revenue in Q2 FY26 and 44% in H1 FY26. Looking ahead, we believe the category is poised for a new wave of demand driven by upcoming technologies, upgrades, and feature enhancements. Many OEMs are actively developing next-generation AI-enabled devices, which we expect will further boost consumer interest and drive growth in both ASP and volumes. This positions us well to capture the next phase of demand as the upgrade cycle accelerates. We believe the broader environment remains supportive. interest rates have been reduced, GST rates have come down, and the government had also reduced income tax slabs previously, which is expected to boost disposable incomes. Together, these factors are likely to create a compounding effect on consumption and drive long-term growth. Several categories in our portfolio continue to remain unpenetrated, offering significant growth potential. As our newly opened stores mature and reach steady-state performance, we expect margins to progressively normalize, setting a strong foundation for sustained and profitable growth in the years to come. With this, I request Mr. Premchand Devarakonda, our CFO, to update on the financial performance. Thank you.
Thank you, Karan sir. Good evening and warm welcome to all the participants. Firstly, I'm happy to share that we received the full insurance claim amount relating to the fire accident that occurred on 29th May 2025 at one of our godowns, which had earlier resulted in an inventory loss to the tune of 8 crores. Secondly, during the quarter, we took a strategic decision to divest 4 of our IQ Apple stores, which are shown as EBOs in our reports. This move is in line with our focus on strengthening our core multi-brand retail business, which continues to offer greater scalability and better operating leverage. By realigning our portfolio towards the core business, we aim to enhance capital efficiency and sharpen our execution focus across 3 key growth areas. Now moving on to the financial performance during Q2 and H1 of FY26. First, I would like to start with Q2 FY26 performance. Our revenue for the quarter stood at 1591 crore. EBITDA for Q2 FY26 stood at rupees 82 crore. EBITDA margin for Q2 FY26 stood at 5.1%. Pre-Ind AS EBITDA for Q2 FY26 stood at rupees 46 crores with a margin of 2.9%. PAT including exceptional items for Q2 FY26 stood at rupees 16 crore. Same-store sales growth for Q2 FY26 was 11.4%. Moving on to H1 FY26 financials. Our revenues for H1 FY26 stood at rupees 3,330 crore. EBITDA for H1 FY26 stood at rupees 192 crore. EBITDA margins for H1 FY26 stood at 5.8%. Pre-Ind AS EBITDA for H1 FY26 stood at rupees 122 crores with a margin of 3.7%. PAT including exceptional items for H1 FY26 stood at rupees 38 crore. For H1 FY26, SSSG stood at minus 4.8%. ROCE and ROE on annualized basis for H1 FY26 stood at 9.8% and 4.8% respectively. The working capital days as on 30th September 2026 stood at 76 days. Pre-Ind AS cash flows from operations as on 30th September 25 stood at 209 crore. With this, we can open the floor for question and answers. Thank you.
Thank you, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mr. Yash from Edelweiss Public Alternatives. Please go ahead.
Hi team. Thank you for taking my question. So my first question is on our gross margin. Like if I see YOY from Q2 FY25 to Q2 FY26, our mobile mix has changed from 51% to 48%, while large appliances sales has increased from 36% to 38%. But while in this YOY scenario, our gross margin has declined, which in the ideal scenario should have increased because of the mix change. So can you please help me with the same?
Sir, this is Premchand. See what happened now, since the GST rate cut announcement came in, there was total slowdown. There was drastic degrowth in the sale of the large appliances category. So during that period, we have to just push some sales by offering additional discounts. That has marginally reduced the margins, gross margins during this period, sir.
Got it. Got it. So the decline in gross margin is majorly due to extra discounts we provided in the quarter. Am I reading it right?
During that slack period, since the announcement came in on that has come on 2nd of September till festive, the sale, which was total slowdown in the market, people actually deferred their purchase decision in anticipation of the GST rate cut. And as a result, like we had to offer, like we have to run the stores and store people also, they have to push the sale on the floor. So these things actually marginally reduce the gross margins, and the GST rate cut advantage will come in the next quarter. That is in the festive season, which went on very well during the first 3 weeks of the October.
Got it. Got it. And sir, on the same line, I also wanted to know what is the AC inventory for this quarter and what was it in Q2 FY25?
So AC inventory, there is, in spite of GST rate cut, there is no traction, I think, in the AC inventory because of this off season. So season was, even the weather was not supporting our AC sales. Still, we are carrying that 200 plus crores of air conditioner inventory, which we thought that it will get liquidated in the festive season, but we didn't see any demand. So we have to wait and see the upcoming summer season, which will start sometime in the second week of February.
So sir, we are still holding 200 crores AC inventory?
Yes, yes.
Yes, so yes, just to add on to Prem sir, yes, whenever we exit a season or our ground stock, which now we're operating 215 stores, so the inventory would be for displays, which is around, say, almost 15,000 units in display across 215 stores, and the subsequent backup stock for that. So if you look at the overall number, we'll be carrying another 100 odd crores of excess inventory that you would be not carrying during this period of the time.
Got it. 100 crores is the excess inventory. That's what I was looking
Yeah,
at.
excess inventory. जो आपने अपनी दुकानें चलानी है, मतलब बेसिक स्टॉक तो रखना ही है ना आपने, तो उतना तो स्टॉक होता ही है. उसके अलावा जो हमारा इन्वेंट्री अटका है, यूजुअली लाइक लास्ट दिवाली से अगर आप कंपेयर भी करोगे तो लास्ट दिवाली टू दिस दिवाली ऑल्सो और दिस सीजन हमारा डिसेंट नंबर निकला है एसी का, बट ऑब्वियसली नॉट अ समर सीजन, तो वो और बेटर हो सकता है समर सीजन में जाके.
Very clear, Karan. And one last question on operating leverage also. Like this quarter, we reported healthy SSSG, and while our store growth was on 20%, so what was the reason for such high employee cost? Was it there someone one-off kuch tha, ya it is going to stay like this only going ahead?
नहीं, it is in line. Basically अगर आप देखोगे तो it is in line with what the employee cost is. इसमें थोड़ा variable incentive भी added है for that quarter. So because we were running a lot of schemes, so the variable incentive was a little higher than what usually we would do. So that employee cost would include that as well. And plus what happened was a lot of stores which we opened in the last quarter or so. So though they took a little time to get launched, but unka managers, security, housekeeping, so you've got to employ a lot of these people. So whenever the incremental store addition happens, the subsequent growth in the cost of employees also goes up, right?
Understood.
Yeah.
Thanks.
To add to this, if you... Sorry to... Hello?
Yeah.
I would like to add one more point. So if you look at the employee cost as a percentage of the top line, it is more or less similar compared to the last year's figures.
Got it. Thank you. Best of luck.
Thank you.
Thank you. Participants, if you wish to ask a question, you may press star and one on your touchtone telephone. The next question is from the line of Mr. Jitaksh Gupta from Tikri Investments. Please go ahead, sir.
Hello. Can you hear me, sir?
Yes, sir, you are audible. Please go ahead.
Oh, yes, sir. Hi. Thank you for the opportunity. So my question is, sir, if you see revenue per store for either it is Andhra Pradesh or Telangana, so it is constantly moving down and it is one of the lowest in this quarter. So, sir, can you please help me understand what is happening with the South market?
Sir, actually what happened was if you look at the store addition also during this, in these clusters, so it was little rampant compared to other regions. So since the denominator has been increasing, so obviously average store throughput has come down. These stores will take time to mature. Normally, the average age of these stores is also it's less than 3 years in these clusters. So I think by end of this financial year, I think most of these stores will start performing, and we are quite optimistic about normalizing the average store throughput.
And then one last question. So how is the competitive landscape in South market?
Competitor landscape?
Yes, in Southern market where we operate.
Okay. See, in Southern market, in the markets like Hyderabad, so we are the market leader. And in Andhra Pradesh, I think we stand number 2. And in Telangana upcountry, we are still holding our market share. We are number 1 only. So in fact, there is not much competition in Telangana upcountry market. In Hyderabad, obviously there is competition. Still, we are gaining or rather improving our SSG. If you look at the this quarter's performance, definitely it is quite encouraging, and we are not losing any market share to our competitors.
Okay, sir. Thank you so much. That answers my questions.
Thank you. Participants, if you wish to ask a question, you may press star and one on your touchtone telephone. The next question is from the line of Mr. Mehul Desai from JM Financial Limited. Please go ahead.
Yeah. Hi, good evening, sir. So my first question is on the top line. I think our full year guidance was of around 15%. But given that the first half there is a miss, how do you see second half panning out, especially because of this GST rationalization? Do you see further acceleration in your overall sales growth and you still maintain your guidance of 15%? That is first question. And second question is on the margins. Obviously, this quarter margins were impacted by higher discounting and weaker mix. But going ahead into 3Q, I am assuming that this discounting factor should go away. So is it fair to say that in the second half, our EBITDA margin should go back to that 6% kind of 6% which we saw in 1Q? These are my first two questions.
Okay, sir. The first thing, that 15% year-on-year growth, since we have already halfway through during the financial year, for me, I think we need to revise that. But still, we are quite confident of reaching low double-digit growth in this financial year. So that is there. It's on the track. And coming to the second question, okay, margins during the Q3. I think now it is going to be impressive. Definitely in Q3, the margins will be better than what we have seen in the last couple of quarters.
And
Yeah. Maybe just to add to Prem sir's conversation on the growth. See the trends right now. See, we had a bad summer, that definitely impacted the AC sellout. But we're quite optimistic on, you're looking at, say, if you're talking about 14-15% growth, you're looking at a additional delta of 150 crores of sellout in, say, March month for cooling season products. So, that comes up, summer comes up a little early, then it becomes much easier for us to achieve that kind of a number. But it all depends on seasonality. It all depends on the thing. But when you're looking at an organic sellout that happens every month, every day, every week, I think we are on track on doing good business. So that is what we are looking at, making sure the market share is intact and growing from there on. The newer clusters are performing. The stores which are yet to get matured are on track to getting matured. So अगर आप सारी चीजें देख रहे हो तो things are looking good, things are on track. But what will definitely help us surpass that growth rate is the cooling product season, which might start a little early, say in March if it starts off early, and then we get that additional 150 crores of growth there. So that is very important.
Got it. And secondly, on Delhi NCR region, while you gave your matured and new store margins on an overall basis, specifically to Delhi NCR region, the stores which were opened in FY23, obviously they are maybe 3-year-old, they are not 4-year-old, but those 3-year-old stores in Delhi NCR, what kind of margins they are clocking?
Yeah. Just a minute, we'll answer that.
Well, I think Prem sir is there to get back to you on that number because we don't have a split on that. So Prem sir will get back to you on that. Yeah.
Okay, sir. No problem.
Yeah, I'll give you that working because we didn't work out that anything for the Delhi stores. But to the best of my knowledge, like it is better than more than 3%.
Got it. Great, sir. This is all. That's all from my side. Thank you so much.
Thank you. Participants, if you wish to ask a question, you may press star and 1 on your touchtone telephone. The next question is from the line of Mr. Devanshu Bansal from MK Global. Please go ahead.
Hi, Karan. Thanks for the opportunity. Sir, you mentioned that we have about 1,200 crores of inventory. So AC inventory is about 100 crore higher versus last year. What about extra inventory in other categories? And further to this question, how much can be the potential margin impact if we sort of try to liquidate this inventory as there was some margin impact in Q2 also. So overall for H2, what is your initial sense on the margin impact of this excess inventory?
Sir, see, we are not carrying any excess inventory in other categories. Because of the bad summer season, we were forced to carry the air conditioner inventory. And I think as explained by our CEO, I think if summer sets in early, we are quite confident of liquidating this inventory before this financial year.
So still, the sense was that because already there was 9 impact in the south, the festive season sort of starts off early. And in Q1, Q4 and also our inventory was 1,200 crore. Now also it is sitting at 1,200 crore. So just wanted to double check as in if you can confirm because the festive period must have a good part of would have already been consumed by September end.
Yeah. If you see the inventory level at the end of September, we started off buying a lot of products, especially for television. The sales went up really well, right? So mobile phones, television, and Diwali Dussehra carries out across categories. So spread across all categories. So we had to buy out a lot of the stocks, right? So except ACs, we had to pile up our inventory for other categories as well. So that is where you would see a higher inventory level. But if we talk about that inventory level today, it is much lower than what usually it would be post the festival period, except again ACs to a certain extent. And baki, apart from that, all other categories are in line with the regular say 40 days, 30 days, 60 days for different categories. So that is in line with that.
Fair enough.
So by 31st December, when you see the number, you will definitely see a much lower number of inventory.
Understood. Can you comment on this festive? You have given some indication about low double-digit growth for H2, for full year, which implies about 20-25% growth in H2. So, can you comment some light as in how did the festive go this time around versus last year? Maybe some trends for first 40 odd days.
We were quite positive on how the festive period panned out. But again, looking at the split between quarter 2, quarter 3, we just ended up our festive period completely in the month of October. We still had another 60 days of November and December to go through. So usually there is a sluggish period post Diwali, right? So वो भी निकालना है, and then there is another 60 days of 2 months of non-festive period in this quarter. So it will be too early for us to comment, but things are looking positive. I would not complain. Things are looking definitely positive than the previous festive period. So, so that is a good sign for us. And that is across all categories and all clusters.
Fair enough. Second question, wanted to check on the incentive, right? So brands also have struggled for this year. And in this particular industry, there are a lot of incentives linked to meeting the target. So do you foresee some lower incentives on account of that because sales, etc., have been impacted? So do you foresee some impact on that?
Prem sir. Hello? Prem sir, you want to take that question or do you want me to answer it?
Yeah, please, sir. I think he was asking you, and that's why.
Okay. So yeah, so no, if you look at that incentive part, looking at that number, we're not worried about it because most of the schemes that we had were all upfront majorly. So there was not much of a sellout or linked scheme that was pending or is pending. So whatever the incentives we were supposed to receive for the sales target that we had completed, that is on track only. So there is no deviation there.
And lastly, Karan, thanks for providing this segregation for mature stores and non-mature stores. Typically, I wanted to check what is the typical SSG that your mature store clocks and what is the same number for, say, non-mature stores?
Sir, you want to answer that? You got the number with you?
It is not readily available, but last year when I worked it out, so fully mature stores, that means stores aging more than 10 years will have mid-single digit SSG. So blended, all the mature stores are actually giving, this quarter was quite impressive. So on the whole, like for the year, I think we can expect high single digit SSG across the board.
So I'm checking for more of a medium-term perspective, not from this year. Obviously, this has been a disruptive year. I wanted to check more from a medium-term perspective. What is a reasonable assumption for SSGs for mature stores and for non-mature stores? Because your average age for non-matures is less than 2 years. So wanted to check on that.
Yeah. See, the stores aging between 4 and 10 will have at least 9 to 10% SSG, and the stores aging more than 10 years will have around 3 to 5% SSG. Sir. That was the historical performance.
Fair enough. And any last question, among categories, anything to call out as in which categories are sort of performing better versus the others? So that may sort of give us some sense on the revenue mix.
In the last 3-4 quarters, this large appliances category didn't perform well. But starting from Q2 of this year, we have seen decent double-digit growth in these categories like home entertainment, refrigerators, washing machines. So we can expect, because the penetration of large screen televisions is much lower in these markets, so that is now getting penetrated. So we can expect close to 10% growth in these categories. That includes the air conditioners. And coming to mobiles, so that will be roughly around 15% year on year. That is the conservative estimate.
Sure, sir. Thanks for taking my questions.
Thank you. The next question is from the line of Mr. Tushar from Athena Investments. Please go ahead.
Thank you for the opportunity. Thank you for the opportunity. So regarding your Delhi, from what I see from the presentation, you have around 31, 32 stores, and you're doing a run rate of 400, 450 crores. So that's around 12, 15 crores per store. So what is your aspiration? I mean, ultimately, where should these stores reach, and in how much time do you think they will go to that level?
So, in Hyderabad market, the average store throughput for MBOs is more than 65 crores. So that is what our aspiration in NCR. So I think it will take maybe 3 to 5 years to reach to that level. And this year we are quite confident of reaching around 30 plus crores per store in NCR.
But just to add on, I think some calculation, I think there's some discrepancy in the calculation that you've done versus what we usually have it. Sir, last year we did around 480 crores of revenue in those stores, apart from the new store that we opened up in Delhi NCR. So this is a Delhi NCR, we would be very comfortably on track of doing around 650 to 700 crores of revenue this financial year.
This year?
Yes, sir. So last year we did 480 crores.
So it's growing
So
at
this is
high
after
double
the
digit.
addition of new stores as well. Sorry?
This is growing at a high double digit, is it?
Yeah, if you yes, definitely. If you see all the quarters that in the last couple of quarters, last quarter also, in fact, after a bad summer season also, the stores have grown there. We've done a total cumulative growth of around 38% this quarter two as well. So looking at the festival period panned out, things moving on a daily basis, I think we're quite positive on reaching at least 650 plus crores in that region. But unfortunate for the region is that the summer starts post April there. So, quarter four would have a very smaller flavor of the summer there compared to the southern region.
So 650 this year, and next year, what do you think would Delhi NCR do?
There are aspiration with the new stores opening up and the stores getting matured in that region. We should at least, grow at least 25% over that number.
Okay. And any plans to get into, southern, like Bangalore, Chennai? Any reason that you've not gone into this area? Because that is
no plans as of now, but definitely we will evaluate, the newer expansion from the next quarter onwards. That's the plan.
Okay. Thank you.
Yeah. Thank you.
Thank you. The next question is from the line of Mr. Siddharth from Vitai Money. Please go ahead.
Hello, sir. Thanks a lot for the opportunity. So, previous 2 quarters ahead, we did share a word from management saying there is a lot of credit scrutiny going around where there is a lot of rejection rates for the EMIs applied by the customer. Would just love to have an outlook as to how it has been, at the moment, and is it actually having an impact on the sales? And what do you expect on the post GST cut? Electronic retailers is expected to be the key beneficiary. How do you expect it to pan out for ML, and the potential guidance would be lovely to share.
Good. First is the credit cards are actually not impacting our businesses. Actually, what happened is the markets where we have been operating, I think in those markets we are able to generate more than 60% of business through these consumer durable financing. And coming to the GST rate cut, so GST rate cut was applicable to in our business, in our trading. So the large screen televisions and the air conditioners, these are the 2 categories. They got the advantage of the GST rate cut, and definitely during the festive season, during Q2 as well as festive season, we did see decent growth. It is very impressive growth in this large screen television category. Whereas air conditioners, being a seasonal product, I think we will see the traction coming in the fourth quarter of this financial year.
Okay. That provides us with a lot of clarity. And my follow-up question would be that there is a lot of non-mature stores that you have at the moment, close to 131 stores if I'm not wrong. So when do we
Yes.
expect marginal contribution from them in terms of the, break even? They are having a break even, but I mean, the substantial margin contribution, the EBITDA improvement from them. And what is your plan in terms of, store expansion fee for FY26 laid out is something also I would love to have a clarity on.
Yeah. Sir, these stores will mature in the next 24 months, most of these stores. And in the sense they will start contributing to the EBITDA margins. Coming to the expansion plan, for the rest of the financial year, in Telangana, we are planning to add 4 more stores, in Andhra, 4 stores, in NCR, 3 stores, and in Hyderabad, 2 stores. These stores are going to be operational by end of this financial year, or latest by April of this in the next financial year, sir.
Okay. So, if you can just let me know overall count as to how much is the plans laid out for, upcoming year, it would be really, helpful.
So, in the rest of for the rest of the financial year, okay.
Yeah. Correct.
Yeah. So 13 more stores. We'll be adding 13 more stores.
Okay. And the concentration would be more exposed towards Telangana markets, right?
Yeah, Telangana, Andhra, and Hyderabad, these are given, and this is an organic store addition. And in NCR, we are planning to add 3 more stores. I think this is the plan till the next April.
Okay. Thank you. It looks very diversified, and I'm looking ahead to be part of the future prospects. Thanks a lot for your clarity, sir.
Thank you, sir.
Thank you. The next question is from the line of Mr. Akhil Parekh from B&K Securities India Private Limited. Please go ahead, sir.
Yeah, thanks for the opportunity. The first question on the North Cluster margin, right? And for the first half, it stood at 1%. But if I remember correctly, I think the last quarter we were guiding that the NCR or North Cluster margins will be around 3 to 4% by end of FY26. So how should we look at it, basically, the North Cluster margin for the full year FY26? That's my first question.
So in Q1, we had a little bit of air conditioner sale happened in the North Cluster. As a result, we had seen 3% EBITDA margin. Whereas in the Q2, it was little slow because of that GST announcement and also the weather conditions. Now, having seen the performance during the festive season, we are quite optimistic. I mean, it is definite that we are going to reach the targeted EBITDA contribution coming in from NCR.
Okay, that's good. So we should be able to reach at least 3% by for FY26.
Yes.
Okay. The second question is, what's the downside risk to our EBITDA margins at a company level if the summer season is not strong as per our expectation, right? What could be the worst case scenario for margins, basically, for FY26?
Yes, sir. Air conditioner contribution is very important for us. So that should, obviously we'll not have 2 bad summers. So next year we're going to come back on track with regard to the air conditioner sales.
Okay. No, but I'm saying just hypothetically, because the expectations are that the winter is expected to be cooler this time, which seems to be the case, right? So if that happens, would it be fair to assume that margins will remain below 6% for the full year?
This financial year, yes. It will be around that.
At around 6%?
Yes. EBITDA margins will be around 6%. And if summer sets in early, so it will slightly improve. It may go up to, it might improve by another 30 to 50 bits.
Got it. So if early summer, then it's around 6.3 to 6.5% margins.
Yes.
Okay. And last question on the CapEx guidance, if you can please highlight like what kind of CapEx numbers should one look at for FY26 and 27?
See, we have, as I mentioned, about 13 stores in pipeline. So those two, I mean, for the rest of the period, you may consider another 25 to 30 crores of CapEx in the next 6 months. Apart from that, for the next financial year, we will be adding, as of now, we are planning to add 30 more stores. So on 30 stores, we'll be investing about 75 crores. So that is the plan.
Okay. Okay, great. That's all from my side, and best wishes for coming quarters. Thank you so much.
Thank you, sir.
Thank you. Participants, if you wish to ask a question, you may press star and one on your touchtone telephone. The next question is from the line of Mr. Harsh from Nepean Capital. Please go ahead.
Yeah, hi. Thank you for the opportunity. I hope I'm audible.
Yes, sir. Please go ahead.
Yeah, thanks. So Karan, you mentioned that your target for FY26 in Northern Cluster should be around 650 crores. So if I just calculate it on a per store basis, it could be in the north of, say, 30 crores of revenue coming in on an average basis. Is that correct? Is the analysis correct, firstly? And secondly, this would be a growth on a year-on-year basis, despite, having a weak 1H. So where do you expect the growth coming in from in the second half?
Sir, see what happened, second half, the festive season went on very well. As a result, we did see decent growth. Means it's more than 25% coming in from North Cluster. And coming to the other thing, see, most of the stores which are opened in the current financial year, they are getting added to the denominator. As a result, we are getting the average throughput lesser. But we consider the stores which are operational for more than 12 months for the purpose of ascertaining the average throughput coming in from the store.
Got it. So yeah, considering that only, I thought my numbers might be slightly different on a per store basis, but it's showing us 27 crores for last year, FY25. And if I had to just incorporate what your guidance is, it should be in the north of, say, 29 to 30 crores. So that's the reason, I thought, where am I missing out?
True. Yeah, that's true.
Okay. So you're saying it's just to conclude, in a summary, you're saying that the festive period sales and the stores which have been added towards the later part of the year or in the first half would start contributing, and that's how you expect it to go up.
Yes, sir, that's right.
Then, thanks a lot. That's all I have. Thanks.
Thank you. As there are no further questions, I would now like to hand the conference over to the management for closing comments. Please go ahead, sir.
I would like to thank all the people who joined on the call. Hope that we are able to answer all your questions. For any further queries, you may get in touch with us or Mr. Devan Dhruva from SGA. We will be happy to address all your queries. Thank you, one and all, and see you soon.
Thank you, sir. On behalf of Electronics Mart India Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.